Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Monday, June the 28th, the year's 2021. Let's talk trading. The battles versus the war with Wall Mall. And I just want to remind you, these videos are for educational purposes only. Your results may differ from mine and from Wall Mall's. Wall Mall and I were having a conversation this morning, and I thought, you know what, this should be the what we talk about this week. The battles versus the war. So Walmart, why don't you tell the boys and girls and non-binary traders what we're talking about?
Well, there's a couple ways we can actually talk about this, but the obvious thing that we can talk about is this idea that when we get into a trade, okay, it is a battle. It absolutely is a battle. You're battling against the market. You're battling against, your own emotions. You're battling against something that's really we shouldn't be battling against, and that's how much equity do you have in the market? And what I mean by that is that, a lot of us as traders, sometimes we over leverage ourselves. We get into a trade, and what happens is, we have X dollars in our account, and because we want to go and make some number, and the reality is that it may not be a number that's really based in reality. It's just a wish, but your account size just isn't big enough yet. And so what we do is we get into this battle where we jump in and get into trades, and we're over leveraged, and that's that's going to become a death by 1,000 cuts, because when you take a loss, the problem is you're taking a loss into your capital, and then you have even a bigger problem, because the next time you take a loss, it's going to go and even bring you further down in terms of what your actual ability to trade is, what your equity is. It's wonderful that these brokers and such, they, some of them will give you, 1 in 200, 1 in 400. I've even seen some as 1 in 500, 1 in 600, but sometimes that can get you into a lot of trouble, because the reality is you're 1 in 600, and next thing you know, you're taking a trade. Oh, I got enough money in the account to be able to go and take a 10-lot trade, and I've only got, $3,000 in my account. And then you go and take you wind up going and taking a 10-pip loss, and you took a 10, and so now all of a sudden you no longer have $3,000 in your account. You got $2,000 in your account. You've blown 33% of your account, and that's a battle that you just don't want to get into. And we need to be very, very careful about that. And so I think we talked a lot about this morning, this whole idea of of leveraging, and making sure that we're not over leveraging ourselves, and making sure that, if there's an opportunity to get in at a different spot where you can go and even help you trade along and stack on, and you're not over leveraged, and you have some room where you can go and gain even more pips, or more importantly, you can go and prevent yourself from losing too many pips, or in this case, too many dollars.
Yeah, well, plus the other thing we were talking about, which was the idea that instead of putting all your troops into one particular trade or deal, it's like you go, no, instead of, say, trading 3 lots, I'll trade 1 lot, and then if it goes against me, I'll add in, and if it goes against me a little bit more, I'll add in. But you're only adding in when you're getting those signals. So
Correct.
You're not just adding in because, oh, I'm down 100, so let me add in. So if it moves, that's not what we're doing. We're taking signals. And part of the I guess part of the reason we were talking about it was earlier last hour, we had this huge candle that on the M5 chart that spiked up to about 16. And I had said to Walmart, I said, that's a return bar on M5, and so price should come back down to about the 38.6 level. And sure enough, it just did. I guess at the end of last hour, it did. It came back to the open of that candle. And so, and I think Walmart said something like, "Yeah, you should have stayed in that short. You were short at 20."
Yeah, exactly. And here's the thing, though. Using that as an example, a perfect example. Let's say we went in at a quarter of what I could go in on. Well, the reality is, let's say I took a signal, and let's say my signal was, and this is not a method or anything else, but let's say my signal was the very next candle after return bar. It goes back towards the open of that particular previous return bar, and I got in. Well, guess what? It went against me. But here's the nice thing about it is I'm only in a quarter of the way I need of my what I'm willing to go and lose on a particular trade. And so what happens is I wait and I wait and I wait and I wait for the next opportunity. And you know what? I jump in again. When I jump in again, you know what? I could have got, here's the great thing about it is if I'm now in 2 trades, okay, and I got in at 2 better prices, I could get out. In this particular case, I could have gotten out with the first trade at break even, and the second and third trades with some nice pips. And if I was smart, what I would do is maybe get out with the first trade at break even. The second trade, maybe I'd go and take some pips, put it in the bank. So I say, hey, I did pretty good. I put some pips in the bank. And what I did is I held out on that third trade and I said, let's see where this goes. And I don't want to go and have the entire trade go against me. So what I'll do is I'll put my stop loss in such a place that no matter what, I'm +1 for all 3 trades combined together. And if I would have done that, man, that would have been, based on where my third trade would have been on that, you could have been up 30-something pips, and so that's how you can go and play that. Now, as TRO has already, let out and said, reality was I kind of did that, but what I did was I went and jumped out early. I took my pips and just jumped out early. I'm not following my own advice, but at the same time, I wound up getting a number of pips on the deal, and so I'm happy. But at the same time, I could have really been happy.
Yeah, but that goes back to even earlier our conversation this morning, even before the battles and the war, and that you had said something to me that made me think you might really be onto something. And what he said was that we all know Walmart wants to make 10 pips a day. That's his goal. And what he does is, until he makes those 10 pips, he's very strict. If he's up 3 and price stops, he'll jump out. Why? Because he says, I'm almost a third of the way there. So let me get there. But if he's up, once he hits his goal, if he says he's up 15 pips, then it's like he gets in a trade. He goes, well, you know what? I move that break even up to, or the stop up to break even +1. I'm up +5 because maybe this thing will run +10 or +50. And just because then he's like, hey, the worst thing is I've got 16 pips instead of 15. Is that about right, Walmart?
Yep. Exactly. That's just the way I try to think about it, because at that point in time, as they say, the mortgage has been paid, the electric bill's been paid. So now it's sort of like, let's go and see if we can go and get a little bit lucky, and see if we can go and get some extra cash. The 1 pip, hey, that's not bad. That's some money in the pocket. It pays for lunch today, and if I get 15 pips, well, that gets me lunch and dinner. And that's just the way I look at it, and it controls my emotion. And every one of us are emotional beings. And I know I say this a lot. I know some people like, oh, you're talking about that psychology thing again. Well, I hate to say it, but the psychology thing, is one of the 3 legs on the stool. And it's just as important as the method, and it's just as important as the exit. So and that's just the reality. In fact, if we don't control that, we can get ourselves in trouble. And that's getting back to this whole idea, of winning the battles, because you can lose some battles, and it's okay to lose some battles. But the thing is, you can't lose the war, and you need to go and make sure that you put things in place so that when you lose the battle, it's not going to mess up your psychology, and make sure that you're in a good spot. One of the things I see traders do over and over and over again is, they get into a trade and they take a loss, let's say. And then what happens is they sit there and spend the next hour analyzing what they did, trying to figure out what they did wrong. And more times times than not, it's not what they did wrong. It's just the market went against you. And unfortunately, because you spent an hour sitting there trying to figure out what you did wrong, you're not concentrating on what's going on your chart, and you miss the next opportunity that would have more than made up for the loss that you took. And that's the thing. That's that battle thing. You're in a war. Okay, fine. I took a hit. Okay, you think about like World War II. How many battles, did the Allies go and lose before they actually won the war? It was. You think about it, even the Pacific. In the Pacific, they lost just about every single battle in the beginning of the war. But ultimately, they won the war. And the thing is because why? They're constantly adjusting, readjusting, and paying attention and making sure that they're going forward and doing whatever they need to go and do. They're not sitting there licking their wounds after taking a loss. They're actually sitting there and saying, did I follow my plan? I follow my plan, keep on coming. And that's what you got to do. The time to go and analyze your trade in every little detail, and I think I said this to you earlier, the time to analyze your trade in every detail is not at 10 o'clock in the morning while you're sitting there trading. That's time to trade. The time to analyze it is 5 o'clock in the afternoon when you're done trading for the day. Now, of course, if you look at the chart and you took a trade because it was a stupid trade to take, and what I mean by a stupid trade to take is you didn't follow your rules, you just went and willy-nilly jumped into a trade, well, yeah, walk away. Okay, yeah, walk away. Don't do anything ridiculous. Or if you see that I've taken 2 or 3 trades in that day, and this happened to me, where I've taken 2 or 3 trades, I didn't break any of my rules, but the market's just not behaving the way it should. Well, yeah, that's a walk away point. That's okay. That's a control, as they would say in military parlance. That's a controlled retreat. And that's okay to do that as well. But if you're just going to sit there and not pay attention to what's going on in your chart, then what's going to happen is you're going to miss the next opportunities because, the reality is most of the time with most of the methods that we talk about here on this channel, and I think I said this to you earlier as well, Tiro, is that a lot of times, yeah, we know that return bars are going to get filled. Now, what I can't tell you is when they're going to get filled. And so, okay, I took a loss. Okay, that's okay. I wait for the next opportunity. Hey, look, it filled it. Great. Not only did it fill it, I got some extra pips. I went and took it, because I controlled my risk on the first trade, I controlled my risk on the second trade. I've now made up my loss and I've made some pips and put them in the bank. And now I'm now on the path to winning the war.
Exactly. Plus, the other thing is that, we might think of each trade that we enter as a battle, and say you have 3 trades open or 3 deals open at once, you think of that as the war. Because you even say sometimes to me, you think of the whole thing each as a trade as opposed to each piece as a trade.
Exactly. Sometimes what I'll do is, I'll go in there and say, you know what, I'm willing to go and risk. And this is actually a little bit separate from I want to make this clear. It's separate from what, I said in my trading document. But the reality is sometimes I'll go in and say, you know what, this is a Walmart trade. It's not the best Walmart trade, but it is a signal. I'm going to take it. But when I take it, I will say, you know what, I'm only going to go and trade, a third or a quarter of what I normally would trade on this, and give myself opportunity to either say, I'm going to take not just a small loss, but a really small loss. Okay, and at the same time, I can also take the opportunity to say, hey, I got another signal for some other reason. Maybe it just it came back down to that Walmart line. I don't know, whatever it may be. And I now have some gunpowder left where I can go in with a second trade and take that second trade. And now, maybe I'm now in with a half normal position size. I'm not taking the full position size, but the great thing about it is that I'm not in jeopardy of losing the war, because the ultimate war that you lose is when your bank account goes to zero. But I'm in zero. There's zero chance for that to happen, and that's the whole thing here. Is that we're trying to go and minimize the chance of that happening. Can it happen even with doing everything right? Sure, it can. The likelihood of it happening, It's very, very small.
And the likelihood that the fastest 15 minutes of trading is up is really high. So, fellow traders, we'll definitely be revisiting this, for the rest of the week. So, just remember when you sit down at your trading platform, it's not what you trade, it's how you trade it. So, go out there and drain the banks. This is the Rumpled One, over and out.